I would now formally start the proceedings of the session today. The first session, the inaugural panel session on the topic of transforming liquidity and cash management, how technology is helping and optimizing the treasury industry today. And for this panel, I want all of you to welcome with a big round of applause because it's the first panel session of the day. And please encourage the esteemed panel members to come on stage. Please have a big round of applause. Joining us first in the panel, Mr. Pratik Kumar Agarwal, CFO from SimSon Pharma. A big round of applause to Pratik ji. Pratik ji, welcome to the panel. Please have your seat. Joining next the panel is Mr. Nitesh Sanghi, AVP Banking and Finance from JSW Steel. A big round of applause to Mr. Sanghi. Welcome to the panel, sir. Please have your seat. Joining next in the panel, Dr. Keyur, Thaker, Professor and Independent Director on Corporate Boards from IIM Indore. A big round of applause to Dr. Thaker. Welcome to the panel, sir. Please take your seat. Joining next in the panel, we have Mr. Vikram Moudgil, Head of ALM Aditya Birla Capital. A big round of applause to Vikram ji. Welcome to the panel, sir. Please have your seat. Joining next in the panel, we have Mr. Arup Bhattacharya, Head of Treasury from SBFC Finance. A big round of applause to Arup ji. Welcome to the panel, sir. Please have your seat. And now our honorable moderator for the panel, I would like to call Mr. Jignesh Purohit, Senior General Manager Finance and Head of Treasury from Alkem Laboratories. A big round of applause to Jignesh Purohit ji. Welcome to the panel, Jignesh ji. So all over to you, first panel session of the day, and it should be a great panel. So all the best. All over to the esteemed panel members.
Thank you, and good morning to you and our panelists. I think we have a beautiful mix of panel from financial services, a professor, and a manufacturing setup. I think this panel is here to discuss the current understanding, the challenges and the opportunities in the cash and the liquidity management. And I'm sure we'll have an insightful session considering the mix that we have. Hi, I'm Jignesh Purohit. Let's first introduce ourselves. We have Professor Keyur, Dr. Keyur, Nitesh, Pratik, Vikram, and then Arup.
Good morning, everyone. Yeah, hello. Very good morning.
I think in the current scheme of things, with AI with us, there are multiple opportunities and challenges that each corporate treasurer have been facing in the current scenarios. Okay, so my first question is to Dr. Keyur on what do you see, how the current landscape is shaping, and what are the current opportunities and challenges that you see in managing cash and liquidity?
Very good morning, all of you. Am I audible? Yeah. So thanks, Jignesh, for moderating the panel, and thanks the organizers for having me here. There are range of challenges that treasury professionals face. However, those challenges or opportunities has to be looked from confluence of four different factors. The first one is the business paradigms or the paradigms of business success themselves have evolved and changed than they used to be years ago. The second important dimension that has shaped this is the development in information and technology and fintech aspects. The third important dimension that has shaped the things is the change in the economic and financial sector environment per se, how regulations have changed, how the competition in the financial sectors have changed. And the final factor is how the finance function per se have changed. Not only the change in the work that finance professionals has to perform as a finance function, but also their workplace and the pattern of work they are going to do. So coming to the first dimension, which is the business paradigms. Earlier what used to happen, the value creation or all the activities of business that were normally confined to the business itself. But now it's an era of co-creation. So business is no longer self-sufficient, but dependent on so many partners, suppliers, vendors, and so on. So that has complicated the aspects of cash management, liquidity management, and of course, treasury. And when we talk about treasury, we not only talk about the short-term related financing requirements, but also the long-term. Because any long-term investment needs also had to be planned every year for your capex expenses. So normally we talk about cash and liquidity management only from the perspective of immediate requirement. But no, you have a long-term investment plans, and for that also funding has to come from your cash and liquidity management only. So business paradigms now focus on co-creation, strategic partnership, and another important dimension that has come to play is ESG, or sustainable procurement or sustainable partnership, and responsible investing partnership. So these all factors have changed the very mix of number of players you deal with what intensity you deal with, and the geography spread of the players you deal with, and the philosophy with you deal with. So no longer you can you can use negotiation as a way of extracting value with your partners. You have to co-create, and then you don't have to do do or do teen, you have to do do or do path. So that is where not negotiation but co-creation is the philosophy, despite there is amazing amount of complexity. The second dimension I'll talk about is the development and fintech and technology. So technological developments have reduced the information asymmetry. So no longer you can take advantage of private information you have. So markets have become perfect. So it's actually not posing challenge, it's posing an opportunity, because everything is transparent. So you can't hide each other. So you can't negotiate. Everything is on the table, and you have to work with win-win situation, win-win philosophy, rather than I will take all and let my not partners and suppliers get anything. And then fintech platforms have actually enabled, provided the kind of intelligence, kind of information, kind of data and connection with all the players in the who are relevant in the treasury. So you have a single platform. So your operational and non-fulfilling work requirement has gone drastically, and now intelligence is already there. So now you have to do genuine value creation work rather than a lot of operational work you have to do. And information about the global avenues and avenues across all the players in handling your treasury is available. So all products, all players, and all the market related information is with you, and you don't have to run around and search and first prepare the information to take a decision. Everything is available at just a click. The third important dimension that I talk about is the financial sector itself, and the economic environment itself has become more comfortable for the treasury players. Because earlier we were all, and when you want to handle treasury, you are only dealing with the banks. And more so earlier it was only PSU banks, but now private banks have become far more aggressive and comfortable to deal with. The non-banking players have come. International or global financial landscape is open for you. So you are not only tapping the money from the Indian market, you are tapping the money from all over the world. And while PSUs are getting shy and shy about coming forward and helping you with your treasury, liquidity and risk management, it's all the players have come. And one more aspect that has come in this domain, in this dimension, is that debt have become less preferred option, and you are more of a private equity, and equity has more been easily available. So for conventional debt related, so certain assets you normally finance with debt, but now the companies are willing to or the investors are willing to provide equity for those assets which were earlier being financed with debt. So and it has become easier because of the changes in the financial sector. And the third and the fourth and final point is that how the finance function itself have changed. So no longer the treasury guys or finance function is only confined to their silos of finance. They are expected to move beyond the finance function and make sure that they create value for the throughout the organization. So the finance function is expected to be the guardian and leader in value creation, and just not controller per se, or not just compliance guy per se, or not just account and auditing guys, but he has to play a far larger strategic role, operational role. He has to also understand the human dimensions of the numbers he is throwing out for decision making and how it affects the human behavior and decision. Further, the treasury and cash and liquidity management is not only confined to the finance function per se. It is all the function in the organization. Unless you leverage and get value by involving and illuminating people across all the functions, you're not going to create value in terms of cash and liquidity management. And now a lot of technological and information flows are available with the finance. So finance are no longer confined to the transactional, operational or trivial roles. You know, finance has more to work on the strategic and value creation role. So these four, the confluence of these four dimensions have brought a lot of opportunities rather than challenges, I would like to say. The challenging times have actually gone. You've got a lot of opportunities and you are fully empowered to leverage a lot and do a great thing as far as treasury as well as cash and liquidity management is concerned. So this is what is from my side. I'll take questions at a later stage because I want other speakers to also put their thoughts forward.
Thank you, Dr. Keyur. Nitesh, since you come from the manufacturing setup, let's have a first-hand experience on what are the challenges and opportunities that you as a manufacturing setup has, in the current scenario.
Yeah, hi. Good morning to all of you. So I think Professor Saab has already put a pressure on the finance department, and I am from the finance team, so I can feel it. So yes, finance is a very important thing, and as he rightly said, debt is no longer the only thing wherein we can raise the finance or have the liquidity in the system. So if we talk about the liquidity per se or the cash, as the cash is the king, we all know. So I think the most important and most convenient thing which we can find in balance sheet is the working capital. When we talk about working capital, so receivables, payables, and the inventory is one of the most important thing, other than other components of working capital, current assets and current liabilities. So one of the simplest thing wherein we can leverage the technology is linking your, let's say, ERP system with a BI, using the BI, and you can create a sort of dashboard, working capital dashboard. You can readily able to see on a real-time basis what is the level of your receivables, payables, like DIO, DPO, DSO, the days payable and days receivables and days inventory. And you can plan and find out the ways you can liquidate it or monetize it, because there are so many products or solutions available in the market wherein you can monetize your working capital. You can even always develop a dashboard wherein on your monitor screen at a real-time basis, you can see how much is my working capital and where are the avenues where you can reduce it. So yes, technology has done all the things, and this is a very important aspect wherein you can leverage it by monetizing your inventory and debtors.
Thank you, Nitesh. So before we jump on to the next question, I would love to add a few things here. Maybe, after COVID, the importance of cash has gone up significantly. COVID was a period where we had so much of learnings that, look, we need to have some amount of liquidity at any given point of time. So I'm sure each one of us has maintained some level of liquidity as well. So moving on to the next question is role of AI in treasury. So my question is to Mr. Pratik. How is AI impacting, cash and liquidity management when it's come to manufacturing?
It's audible? Yeah. So specifically, artificial intelligence is not new. It's we have a lot in topic we have discussed with the artificial intelligence, but it's a revolving subject. So basically, AI role in cash and liquidity management, if I talk, AI is very see, we are, as a finance leader and the CFO, we are looking for the dashboards, predictive analytics tools, and for the strategic decisions we have to take in. So I think AI plays a enhanced role because AI algorithms are very, he reads the patterns and data complexity. So it's arrange and deliver the data into faster and more analytical based. So AI is very enhanced and it's very useful tool for now because all the fintech companies and the bankings and more IT sectors are using AI and lots of creative and enhancing decisions are taken based on using the AI. And it's basically used for the predictive analytics. It's downloading huge data and gets the results more faster and time-saving tool because all the treasury and the banking, they are using this tool. They are taking more time for the strategic decisions making. And regarding for the liquidity, if I talk about, so it's used for the optimization purpose. More resource we can optimize, and simultaneously we can analyze the things and data more strategically.
Thank you, Pratik. Arup, since you come from an NBFC background and you have an experience from the manufacturing setup as well, can you throw some light on how AI is helping us here?
Yeah. So good morning, everyone. So just to add up what my co-panelist was mentioning about the role being played by artificial intelligence in terms of doing a cash and liquidity management, would like to mention that I would like to take this to 3 or 4 buckets. And some of the points Dr. Keyur also had emphasized. So I would like to put that in a proper order so that we can all also look at the critical aspects. So just to mention that the first point I would like to talk about the visibility. As a treasurer of an organization, the biggest challenge which we run is that how do we create more and more visibility? Because visibility helps us to take an informed decision, and in terms of ensuring that the right cash is available in the right bank account can only happen when you have a right accessibility. Otherwise, there is a possibility that the decision which you are undergoing may have a lot of implications to it. So I think visibility and forecasting is one of the key pillar to the entire role which artificial intelligence is playing. In terms of taking that to the second level would be about how you are able to monitor them out. Because when I think I've worked in the manufacturing sector, as you was mentioning, Jignesh, when the organizations are growing and we are moving in a globalized world, or even if we are trying to make ourselves deglobalized, the cash maintenance and the cash, you are able to optimize the cash will be very much critical for you. In similar manner, when we are moving to the same management, we will have to see it that how you are running your investment decisions or funding decisions, because as a treasurer, your role is not only to maintain the cash forecasting or visibility, you will also have to ensure that the company is able to suscept through in the difficult times, and they are able to do the liquidity management, and whenever there are surplus, the deployments are placed in such a manner that you are able to generate a high returns, which help you to ultimately optimize. Like in the current scenario, whenever we are an NBFC, we need to keep on raising funds, and fund is only a raw material, but fund does have a negative carry until you deploy. And then that leads to a lot of monetary losses, which cannot be fulfilled just by deploying in some of the instruments. Similarly, the last bucket I would like to talk about, which I think is a very critical aspect, and of late has been, especially in NBFCs, regulator has been very much talking about, is compliance. Because not only getting the cash visibility or ensuring that you are able to rightly deploy it out, you need to also ensure that you are able to comply with the regulatory guidelines. Because RBI has, like in the case of NBFCs, in different layers, they also have liquidity coverage ratio. They want every company to be able to deal with it. Because if we go back 5 years back or 7 years back, there had been situations, be it for a mutual fund, AMCs, or be it for NBFCs, they have got so much of liquidity shortages, wherein compliance has taken that a proactive approach and ensure that there are some definitive steps taken, and all the companies, corporates are gradually moving in that direction. I think if you are able to sum up in all these 4 pillars, it really plays a pivotal role in ensuring that we are able to deliver as per the requirement.
Sure. That was insightful, Arup. So just to summarize what our panelists said is basically in the current scheme of things and the current scenario, with all the tools that we have. So first is the visibility that, much better than we had, 5 years back. Then we have a better trend analysis. Basis that you add up your seasonality into the model, you will have a better forecasting. And with better forecasting, then you will have a better decision making. Okay. So the next question is to Mr. Vikram, again, who is part of NBFC having a different product line. Can you just throw us a light on how BI and different intelligence tool are helping us out, and supporting in this strategic decision making and, managing cash and liquidity?
Thanks, Jignesh, and good morning, everyone. I think most of the point is covered by Arup itself, that for NBFC, liquidity management is one of the critical aspects. And as a quasi, as we are also part of upper layer NBFC, to manage such a large treasury, and especially to manage such a large cash flow, is one of the critical aspects on a day-to-day basis. So for that, you should have right information at right time that we follow. Of course, that come from different tools which company has invested on. So for example, we have a treasury solution which provide us a lot of dashboard which on a real-time basis, on a regular basis, which help a treasury person or treasury manager to monitor the cash flows on a regular basis. And based on that, we took a decisions, as what Arup said, that negative carry is one of the critical aspects for any NBFC or any corporate, right? A penny left on an account have an impact on you. So you should be invested every time, and the return should be that way, that your negative carry should be reduced by that much. Second aspect, which I think Arup also is touched upon, is on the compliance side, right? So apart from managing liquidity, one of the critical aspect is to be compliant in each and every day. As Arup said, we have LCR in place which we have to monitor or have some percentage on a regular basis. To dip into that is again a problematic for any company, right? So it's a mix of both. First of all, you have to manage liquidity on a regular basis to know the information that you have. A lot of tools available in the market, and I think a lot of NBFCs are using a lot of tools to monitor or to have a real-time information on a regular basis. It's not only about your liability which is going out, but also need to monitor your recovery side, your collection side also on a regular basis. Of course, that help us to do predictive modeling, because sometimes you have prepayments, sometimes you have prematures also available, which cash come into place, and you have to be available that much. You should have that much amount of investment opportunity where you can invest that money on a regular basis, right? So it's a mix of both. It's a mix of managing cash on a regular basis, but also be compliant on a regular basis, because as a regulator see, as for all the industry, not only about NBFC but also to corporates, right, where you have a regulator in place, they monitor each and every steps of you which you do on a regular basis. So you should be, as an organization, you should be on upfront on that part also. So that's what I...
Sure. Thank you, Vikram. Nitesh and then Pratik, can you throw a light on how business intelligence is helping to unlock cash and liquidity management?
See, obviously the compliance is most important part, and there is a technology which throws you whatever compliance you need to do. You need to have a checklist, then the dates, if at all you have to follow and all. But as a finance manager, if you have any balance available in your CC account, a credit balance, that's a crime, I will say, because it's a green balance which has no use, and you are losing interest out of it. So managing that cash in a proper way, using it, maybe investing it, is very important. And that's where various BI tools, AI tools are important, wherein you can forecast your cash flows on a daily, weekly, monthly basis. You can plan in such a way that whatever is the balance available at the end should be either converted into FD, obviously with dealing with banks and all, or maybe during the daytime you can invest in mutual fund or something. But I do feel that keeping cash should not be there, which has no use at the end.
Basically, I can add with the points like we need real-time data, accurate data, and we have looking the data more positive and more strategically. So these AI tools, and if I talk for the different tools like Power BI or machine learning, they are using these to seamless data more faster and more accurate. And we can analyze data, historical data, which data we can analyze with the saving of time. So basically, if I talk for the accuracy point of view, this is more accurate, and the limitations for the traditional follow for the manual working, they replace this with more accurate and more transparent. And additionally, if you take as a risk management perspective, they can use for to identify the patterns and errors which are basically not handled by the manual audits and routine checking. So I think for unlocking this finance, this new technology we can use with for the more optimizations, the resource, and more strategically taking informed decisions making.
Sure. Thank you. Next question is to Arup. Arup, how AI or any other tool, be it, is helping us to predict the cash flow forecasting in a better way?
So I think quite a few points have been mentioned, but I would like to take a step back in terms of what is the missing piece in the cash forecasting part of it. So the missing piece which you may find is, it is quite traditional and have been being followed way back. Okay, there are high possibility that you may lead to do some kind of manual errors or typographical errors, and it is susceptible to taking an incorrect decisions over there. So the cash forecasting needs an upgradation over there. When we are talking about the AI piece, I would like to add on that AI has to be used as a complementing tool for an HI, that is human intelligence, to perform better and better, because an human intelligence mind can take a right decision, but for that right decision making you need to have all the tools used, like predictive methods are there, or maybe NLP, which is the way language processing is being done, or machine language processing being forwarded out. In all those order, if you are able to get an HI on top of it, you are able to optimize it out. So the cash forecasting, becomes much more better, optimized, and also you are very clear that there is no incorrect information which is getting flowed over here. Now, how do we can, work on the same? Like in our scenario, also in our case, what we are presently working is trying to ensure that we have an integration with our ERP and the bank, and the same flows immediately for the cash flow as a daily cash flow processing. What happens is that in the opening day when you are receiving the funds, you are very well aware that how much is available, either surplus, or if you have to go for more funding decisions. So this cash forecasting tool does have the dimension of using AI in a much more deeper manner, and HI can ensure that the cash flow which is being forecasted can be lead to increasing the returns.
Sure, thank you. So just to summarize, what panelists said, I think data is the key to success when it comes to AI or forecasting the cash flow, right? So what is important is the master data that, which sits below the AI is key to success. So just to share a few experience that I had in my personal life is, we had an BI tool from the sales perspective dashboard, right? So what we did is we created an BI over an SAP, which gives us a sense of, let's say if my debtor is having a credit period of 30 days, but actually it pays in, let's say 50 or 60 days. It will summarize the initial, the higher 80% of your debtors and tell that, look, your credit period is not 30 and then it's 50. Then, the forecasting is little better. So I think there are a lot of tools available in the market who would give you a better predictability of what cash is.
Yeah, so adding up to it, Jignesh, it's just a real a big point you have highlighted. Similarly, in our present case, for doing a liability management also, we do take care, like when the ROI, rate of interest, is going to get reset. A lot of time you don't have a visibility about it. So what happens is that AI facilitates to give a flash up that as per the agreed frequency, be it a month or 15 days or maybe 3 months, the rate of interest is falling reset. And a lot of time, all such, smallest of the issues which might be getting overseen actually adds up to a revenue leakage, because you have lost the opportunity, the interest reset happens on a forthcoming time, and then you end up paying a higher interest. So it adds up to lot of work volume also and ineffective working. So what happens is that all these slightly of the things wherein AI plays a crucial role, but obviously AI cannot work it out if you don't have a clear mindset that ultimately as a human being what you're trying to derive, because you have to drive that to get the desired outcome from there.
True. So I think let's keep this panel little more engaging. We'll have Q&A session with all our audience as well. But before we jump onto a Q&A, if anybody wants to add any other perspective, feel free to please add.
Yeah. So I would like to maybe discuss about some of the solutions available in the market. Basically, wherein you can monetize your cash or maybe convert your receivables, payables, and inventory into cash swiftly. So let's talk about receivables first. So factoring is a very well established thing as of now, and bank need to take exposure on your customer, and you can do the factoring, okay, and you can get the money instantly. New, you can say, this solution is coming, which is factoring based solution, in which let's say if you have a pool of 100 customers, so bank will typically take a exposure on top 10 customers only. Balance 90 they will not take, because they don't want to take a exposure on those companies. So what the bank is providing solution is, they will create a pool of your customers, let's say they are taking 30 or 40 customers, they will set up a limit. For example, let's say 100 crore limit is set up. And they will do the due diligence of those customers based on your ledger, based on your whatever dealings you are having. And on that pool, whatever customers are there, you will act as a collection agent. So as soon as you supply the material to them, you will approach bank for discounting or rather factoring of those customers. And you will get the money. On due date, you have to pay back to the bank. And since the exposure is on you typically, so bank is willing to take that risk. At times, bank is also taking insurance to cover the risk if there is any. So this is typical, and it's without recourse to either side, and even the limits are set up on banks. So this is one way wherein you can reduce your receivables, convert it into liquidity. Again, this needs your ERP system, and you can even very well link your ERP with the bank through API, and it can be done on real-time basis. Similarly, coming to payable, we have various solutions for MSME, SME, e-trades and all by Government of India. One new interesting product or solution which has come is the deep dive financing. So let's say I am a purchaser, I am a buyer, and I will be known as an anchor for this program, and I have 10 suppliers. So as soon as I will buy the material from any of the supplier, bank knows, I have a good credibility with bank, and bank knows that I have to make the payment to that supplier. Okay. So that supplier will be known as a tier 1 supplier, and some of my receivables I will assign to the bank, or let's say I will give a confirmation to the bank that these receivables I will be routing through your bank, and against those receivables I will be making the payment to my tier 1 supplier. So based on that, what bank will do is bank will allocate some tokens to that tier 1 supplier, and if my payment comes 60 days, so that token is available to that supplier for 60 days. And during those 60 days, anytime they can discount those tokens against the cash and get the discounted value of it. Bank has a comfort because I will be getting the money from my customer, and I will be making payment through that channel. So bank will mark a lien on that typical payment, and they will be get the payment on a daily basis. From tier 1, this is tier 2 also. So if that particular supplier of me has, let's say, 10 more suppliers, so against those 10 tokens which has been given to tier 1 supplier, he can allocate to further suppliers, and it's an entire supply chain mechanism which is being followed, and it's entirely secured because bank has a comfort on me, which is anchor. Now technology is very important in this, because without technology you cannot have a mapping of this, and it's an entire blockchain mechanism which is depending on the entire supply chain technology mechanism. So these are some of the tools which I will say are available in the market, wherein you can leverage and monetize your cash, monetize your receivables or payables into cash.
No, very true. In fact, I personally have utilized both these tools. So I think channel financing and vendor financing, both with this digitization, have actually added new features to liquidity management. And I think earlier a lot of field work was required for these two aspects, but now because of digitization, these are very, very quick and fast. And there are added advantage to cash-rich entities as well, right? So let's move on to a Q&A session, and then happy to, answer any of the questions from the audience.
First of all, ladies and gentlemen, can we have a big round of applause for this wonderful panel here? I think our first panel of the day, and very wonderfully conducted. Jignesh ji, thank you so much for that, and a big thank you to all the panel members. Yes, we do have time in hand, so we can take a quick couple of questions. So I request to the floor, if you have a question, please raise your hand. We will pass on the mic to you. Please introduce yourself, and keep the question limited to per person only one. And please do address to which panel member specifically the question is. So any questions from the floor? Can we have the mic to ma'am, please?
Good morning to everyone, and thank you for very nice insight that you gave. My name is Anita Gandhi. I'm working with Arihant Capital Markets. So this question is to everyone, and specifically to Mr. Nitesh Sanghi, that see, world is changing every day and technology has given so many options to us. So what is the biggest challenge that the treasury heads are facing today in terms of remaining on the forefront?
See, the biggest challenge for a treasury function obviously is to have sufficient cash in hand. Okay. However, the challenges which comes to have liquidity or cash in hand within the company, you have to have, let's say, a planning, how much collection is going to come on a daily basis, and then how much have to be deployed, how much have to be invested, and how much payments we have to do. Along with that, the challenges which come is the regulatory, the compliances which we have to do with it, because more and more compliance are coming into way, and they are more technology driven. Government is also into technology, and whatever transactions you are doing are getting, if it is not a correct one or it's wrong, it's getting caught by government. So that is very important. And there are various government policies, cross-border issues, regulatory transactions which are coming. Then you have some issues related to if you are dealing in foreign currency, then FX transactions, how much to hedge, when to hedge, how much to keep open. So these are the challenges which typically are there to a treasury guy. On a day-to-day basis, you have to monitor your receivables, payables, that is most important. Then even your long-term debts and long-term investments have also come into play. So it's a typical minute management on a daily basis about how you have to run your organization, because I will say typical the short-term finance or working capital is a bread and butter of any organization. And if you are not managing it well, and if you are having a cash crunch or a working capital crunch, the company may go into some sort of problems. So you need to have sufficient funds in hand. That's what I feel the challenges are there.
Thank you.
Yeah, so I would like to add something to what he said. So there are a lot of tools and fintech innovations are available. The challenge is how to leverage them. So you have access to so many tools, but you are confused which one is how useful to you. And even if you have few tools, you can't take the full potential advantage of it. So learning fast and leveraging on this is important. And it's not only the finance function per se has to leverage on those tools. So cash, liquidity, treasury management is not only confined to finance function. It's all the functions in the organization, operations, sales, collection function. They all have to work together. And how do you have all of them leveraging on these tools and you all work together using those tools is one of the most important challenge you face. Another is because of technological advancement and so many tools, there are a lot of information. And it's very important that you only pick the ones which are relevant to you and you can leverage. So Vivek is very important, Vivek Buddhi. Prudence is very important. Like you are sitting in an ocean of information and you don't know which one is making sense to you and which one isn't. Third is a lot of compliance related issues have come. And not only the ESG related issues, the traditional regulatory compliance is also there. You have national security related issues are also coming up. So how do you, so this is not only three, there may be large number of other challenges which one has to, take into account and do it. One more important aspect has come is no longer as a total of your balance sheet. Operating assets are increasingly smaller portion of your balance sheet, and the financial and investment related assets actually constitute up to 70-80% of the balance sheet of some of the top companies. So the value creation is not happening at the operating asset level. the large share of value creation or the potential for value creation also has to happen by leveraging such as up to 70% of the balance sheet, which is to be handled by the treasury people. So treasury people are not only handling that 70% of the balance sheet, they also have managed the 30% of the balance sheet also. So how can you handle such a vast, canvas of things that you are at? And beyond that, finance team also has to make sure that they keep themselves updated and they not only attract the talent but retain the talent and get the things done. So the challenges are increasing, but they are also giving you an opportunity. And that is where it will differentiate between a high performance treasury and finance function with a not so well performing. I think that's what I wanted to add.
Thank you, sir. Thank you.
I would like to add one point over here, and I think Dr. Keyur very beautifully summarized it up. As a closing statement, when we look upon as a treasury heads, the biggest challenge or the risk which we are facing through would be how we are able to integrate the data and use predictive intelligence in ensuring that you are able to become a proactive function than being just a reactive function. Because Dr. Keyur was also mentioning the same point, that when you, as a treasury head, when you look at a data, and if the data is breaked into multiple parts, you cannot do anything with it. You would require an integrated data points, and based on that, if you are able to use a right predictive analysis of that, you will be able to really overcome the challenges. And the challenge is not going to change. I think what we are dealing with as an AI, the things were not much different 20 years back as well. The only thing is that there is an additional tool and lots of information is available with us, which always ensures that you are able to use the information in the right manner. So decision making will also be very much critical for each treasury heads to overcome these kind of challenges. Thank you.
I'll take 10 seconds more. The biggest challenge, little off the topic, but the biggest challenge as of today is where do we invest? Because management has a habit of getting 7.5%, 8% after, in last 6 months, the rates have come down. So that's the biggest.
Thank you so much. And a big round of applause, ladies and gentlemen, once again. And thank you to the esteemed panel members for taking the questions. Now, I would request the panel members to kindly be seated. And I would like to call on stage Mr. Arindam Karmakar, Pre-Sales Director from our presenting partner, Kariba, to do the honors of felicitating this wonderful panel. Thank you, Arindamji. Welcome on stage. We will start first with Mr. Pratik Kumar Agarwal from SimSon Pharma. A big round of applause to Pratikji for his wonderful contribution in the panel session. Moving next to Mr. Nitesh Sanghi from JSW Steel. A big round of applause to Nitesh ji for his wonderful contribution in the panel session. Moving next to Dr. Keyur Thaker from IIM Indore. A big round of applause to Dr. Keyur for his wonderful contribution in the panel. Moving next to Mr. Vikram Moudgil from Aditya Birla Capital. A big round of applause to Vikram ji for his wonderful contribution in the panel session. Moving next to Mr. Arup Bhattacharya from SBFC Finance. A big round of applause to Arup ji for his wonderful contribution in the panel session. And now I would like to call on stage Mr. Jignesh Purohit ji from Alkem Laboratories, our honorable moderator for this panel. A big round of applause to Jignesh ji for wonderfully moderating the session and also for his beautiful insights and thoughts in the panel. I would now request all the panel members if you could come on the front with a group photograph, and Arindam, if you could also join them as well. So ladies and gentlemen, that was our first panel session of the day, the inauguration with a beautiful session on a very interesting topic on transforming liquidity and cash management in Treasury, and we had a fantastic session for the last 50 minutes with these esteemed panel members. A big round of applause to once again to this wonderful panel.